Good afternoon. This is Todd Horwitz, coming from the floor of the CME Group in Chicago. And as we talk about Humphrey Hawkins, of course, that's the semi-annual testimony that the Fed chair gives. In this case, happens to be Janet Yellen, and she is now testifying on the Hill. And she's finishing her first day, going into her second day of testimony tomorrow. And of course, what do we see here? We see a market that has now been dealt some what we would call mass confusion. She indicated a very dovish tone throughout her conversation, saying that, well, we're not maybe going to raise so quickly here. But then on the other side of the coin, she said, but we're going to start to liquidate our position, which means they're going to sell bonds. So if they sell bonds, that raises yields on its own. So again, they can say that they're not going to raise, but it does, if they start to sell, yields go higher anyway, so they don't have to change the Fed funding rate. The 30-year Treasury and everything else will start to rise. And that's what we're looking at here, is the 30-year, I think, is now coming once again into a nice area to sell. I think you want to look at the 153, 154 area, because the bottom line is here is simple. We're going to see higher interest rates because either the Fed is going to raise, which is going to put rates higher, or they're going to liquidate their position, or we're going to have, if the economy is as good as they say it is, then we're going to have a natural demand. So rates are going to rise by themselves. So there's every reason to believe that the Treasury bonds, the 30 years, are going to fall because that would raise yields. And of course, when we look at that, that's the entire picture. And we have to make sure that we understand the relationship. So even if they say they're not going to raise, if they start to liquidate, means that they're raising without telling you that they're raising. So it's something to watch, and I think you want to look to be a seller here of the bonds at 153 to 154. It's a wide range, but they do trade with extreme volatility right now, and that's what I'd be watching, and that's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.